been a ton of questions from our clients and other folks in the various industries that we cover about my thoughts on where valuations are going. I mean, as many of you know, those of you who've watched Aftermath, Unhinged, Bubble Trouble, all the presentations that we've done historically, we completely nailed the front end of the most recent cycle here during COVID, where there was just complete monetary madness, and we saw valuations spike 20 and 30% across pest control, HVAC, plumbing, waste management, all these industries, right? After 40 years of declining yields or interest rates, after 40 years of increasing asset prices, after 40 years of globalization, post-COVID, this is all slammed into reverse. As the owner of a pest control company, as the owner of an HVAC business, a lawn care company, it doesn't matter what you own, but as the owner of a business, first and foremost, you're an investor. You're a private equity investor in your own business. After 40 years of increasing valuations, and acutely since the great financial crisis, central banks conjuring trillions of dollars in bank reserves, forcing asset prices to effectively 5,000-year highs, we're now in an era where monetary policy is beginning to reverse in order to fight inflation.
The Inflation Reduction Act has, in fact, passed today.
If you take a step back as a business owner and say, okay, where are we in this cycle? Now, every one of you sits back and says, look, business is robust, right? We've got a lot of demand on our services. It's hard to find employees, particularly on the residential services side space that has naturally grown at a dramatic clip during COVID. I often tend to focus my attention less on industry fundamentals and more on the greater macro environment. And when you think about your business, at the end of the day, your wealth really is that stream of cash flow that the business is generating. So when you talk about value, right, if you take a step back and say, okay, what's the value of my business? Well, the value of your business is how the market is pricing that stream of cash flow going into the future. And the market prices and misprices assets. And if you look back through history, you'll see a lot of these service businesses sold at 4 to 5 to 6 times EBITDA 15 years ago. And then we saw prices spike. And again, I don't care if it's pest control, lawn care, I don't care if it's waste management. We saw transaction multiples go 10, 12, 15, up to 20, plus 20 times EBITDA, which is a staggering number. In this environment now, we have multiples contracting. That means as yields go up, valuation multiples are going down. And what's a multiple? A multiple can be a multiple of revenue. It can be a multiple of EBITDA. It can be a multiple of EBITDA. We can use any proxy for cash flow. And we can say, okay, a business is worth 10 times cash flow. If it's got $1 million in cash flow, it's a $10 million business. So the multiples are contracting, and it doesn't take a rocket scientist to figure this out. You just look at the Wall Street Journal, Google Finance, CNBC, and you'll see since the height in November of 2021, markets have been rolling over. We're starting to see central banks around the world hike interest rates into decelerating economies globally. Europe's a basket case. The United States is decelerating. We're going to begin to see the consumer and the consumer's ability to acquire services, like your services, decelerate, which is going to put downward pressure on cash flow. So now, not only do we have the multiple contracting, but we also have that stream of cash flow contracting. But at the end of the day, you're building a business, you're taking this risk in order to be able to monetize it at some point in the future. You want to provide for your family, you want to buy a racetrack, start a cigar lounge, buy a massive yacht, whatever the heck it is that you want to do. You ultimately want to monetize your business to be able to do that. And we've lived in an era of very, very low and sometimes disinflation. And every time the public equities markets would wobble, the central bank came in and provided liquidity that would kind of goose the stock market. After decades of this, we've finally gotten to the point in time where the central bank can't come in and rescue the market because they've got to deal with a high inflation print. Your wealth, the value you've built up in the business, is nothing more than the future stream of cash flow that business kicks off. The value of your business is really just the price of that future wealth, right? And so it's the market that prices that. And the market has been dramatically mispricing that stream of cash flow for the last 5, 6, 7, 8 years. It's beginning to reverse. We're facing a lot of very secular headwinds that are negative to valuation. Again, I don't know where they're going to be in 6 months. I don't know where valuations are going to be in 12 months. But as a business owner and as an investor, it's important for you to open your eyes and look at the signposts, not only from a monetary and fiscal policy perspective, but also a geopolitical perspective. I'm not trying to scare you into selling your business. That's not what I'm trying to do. At the end of the day, we're in a different regime now, and valuations are likely to fall. So if you haven't thought about your retirement, if you haven't thought about safeguarding this big financial asset that you have, now it's time to really, quite frankly, take a step back and think about that. And the next discussion we're going to have is going to be about understanding your strategic alternatives. How do you think about private equity? How do you think about a strategic acquirer? How do you make a decision as to how to really maximize the value of your business, but also satisfy all the competing interests? Like, how do you make your family happy? How do you make your employees happy? And how do you de-risk your life? And thinking through the strategic alternative process, I think once you get to the point you're starting to explore a sale is really important. So that's what we're going to talk about next.